Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Due to the New York close on Friday above 60.75, the Australian dollar has remained relatively firm and now posting a fresh high of 61.82 this morning before dropping back slightly. It is assessed that the bulls may continue its trek due to the MACD breaking above the zero axis here, along with marrying up with the RSI, and initially could see a rise up towards 62.30. But I will say one thing, is the fact that the rise may anticipate a bearish ambush and see the market reverse very sharply. Very hard to assess where the top may be, but I presume anywhere from 62.30 up to around 64 cents is where the bears are likely to be harboring, and therefore I do expect to see the initial move away from this area back down towards the region of 60, 65.70 and then lower back towards 58 cents. Looking to the euro, well, remarkably the US dollar index has continued to fall for the 9th straight day, and therefore from that has posted a fresh low to the index of 98.33. With that, the surge was seen in the euro, but didn't quite reach its target after it broke above 111 with a resistance seen around 111.6080. The market backing away slightly. Just keep a very close watch to how this indicator plays out, because if we do see a slip back underneath the MACD, then this will give the bulls confirmation that the break above 111 was a false break and therefore could see a pullback towards 110. This week, all eyes look towards the US unemployment claims. Along with that, we've got the main event at the end of the week being the US non-farm payrolls number. So no doubt the market will be a little bit nervous as we get closer into towards Friday, that is. The dollar yen has continued its trek and now may be looking down towards the region of 105 after cutting and reaching first and then cutting, that is, of 108 figure 40. I do assess that the technicals are nearly confirmed the move to the downside to the fact that I'm looking at 105 figure 40, and therefore any advances should be limited, and with the initial support seen at this stage at 106.65, but there's a little bit of a support on the way down, but eventually I feel the way the market's falling in the last 3 days could reach this target very soon. I haven't had a strong view in the pound, but I do assess one factor is a move towards the level around 126.70 to 127.45, which isn't too far away, could find good supply, as this was the break on the downside from previous, and could find a bearish ambush ready from that level. So maybe reassess from there and look towards maybe shortening the market, because the MACD is still a little bit towards the bullish case, and therefore that does imply that we could see a couple of more 100 points to the upside. Well, the market was taken by surprise on Friday after the Bank of Canada slashed its target overnight interest rate to 0.25, cutting it by 50 basis points. By surprise, the market actually fell quite initially and reached its target of 139 and was rejected. However, from the technical assessment, there's still room to at least one more test towards that level, with any advances likely to fail towards region of 141.70. We are still at this point capped from 1,648 in gold, as the market is now struggling with a little bit of noise, as you can see here, and the market from the RSI has broken down a little bit. I do anticipate that any pullback may find support for the start of this week around 1,608 to 12, but the base still holds around 1,590. Then we may see a step to the upside, so do keep that in mind. A break of 1,648 will initiate the target up towards 1,700, which was the recent highs seen posted here. Finishing off with oil, well, the market has broken down even further, and as you can see here, it has gapped down from the Friday close of 22.95 down to the low this morning, which was seen around 21.69. I do feel the market is getting to a point that we could see a snap to the upside, and there is strong support at this stage seen around the level of $16 to $19, which is last witnessed back in 2002. Let's see if the market can stage a recovery today, because it is getting a little bit concerning in the fact is that from a daily point, how oversold we are. So let's see if we can see a rebound. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report and hope you enjoy the great start to this new week.